In this video, I'm going to talk about how to find the next meme stock before it explodes and how to maximize your gains while minimizing your risk. So far, 2021 has been the year of meme stocks, with GameStop and AMC going bananas. You probably saw a bunch of people on the internet make life-changing money, and you may be bummed that you missed out, or even worse, that you were left holding the bag. So I often get asked if it's too late to get in on a specific stock when it's experiencing a huge run-up, so I wanted to break down what you can look for to identify a potential opportunity, when you can get in, and how to make sure you don't get left holding the bag. Let's discuss my approach with trading memes. First, the most important rule is only use money that you're okay with losing. I say it all the time, but it's especially important with stocks that may not have the strongest fundamentals. So don't use your rent money or borrow money to trade memes. Second, by their nature, most meme stocks aren't positions that you're going to buy and hold for years. You're likely going to be in and out of the position pretty quickly.
That's what she said.
Maybe a week or two, maybe a few days, it all depends. But in all likelihood, this is a short-term play, and thus here in the US at least, you are subject to short-term capital gains tax, which is taxed as ordinary income. So keep in mind that if you make any money trading, you want to set aside roughly 30% for taxes. And because I'm not a tax professional, you should check with an accountant to be sure of your tax situation. Third, there will be haters, and that's okay. A lot of more traditional traders look down on meme stocks and stay away from them completely. That's fine. Other people may think meme stocks shouldn't be memes and are legitimate companies to hold in your portfolio. That's fine too. And others may think you have to hold your position until it reaches the moon. And that's fine as well. I don't have a strong feeling either way, and in my view, people are free to trade how they like. Every trader trades with the intention to make money. That's the only goal. So if you make money from memes or blue chips, who cares? Fourth, a lot of people are proclaiming one stock or another is the next GameStop or AMC. But here's the thing, not everything is going to have an insane short squeeze like these two have had. Squeezes on a smaller scale happen on a regular basis, but having a stock go from $3 to $483 in 7 months is definitely an extremely rare situation. So it's important to adjust your expectations. So the people that profit the most on meme stocks are people who got in before the hype, when the price was low and it wasn't all over the news or Twitter or wherever. Again, as I've said, when your grandma calls asking you to buy a share of GameStop for her, that is not the time you want to be getting into. So since hype is part of what turns a normal stock into a meme stock, you want to find them before everyone else jumps on the bandwagon. Wall Street Bets on Reddit is likely the birthplace of meme stocks, so let's start there. It's a little bit different now that it's become a household name and is home to over 10.5 million Redditors. News outlets and hedge funds alike are definitely keeping an eye on the subreddit to find ways to exploit it, but so can you. The simplest way is to look at the DD posts, or due diligence. Here you can read what stocks people are talking about and why they believe it's a good trade idea. There are plenty of terrible posts with flawed logic or no logic at all, but there are actually some pretty good ones too, so you have to be able to discern between the two. Oftentimes, the comments will have additional insights or opposing views, so you can start to suss out what has potential and what doesn't. Once you have a list of tickers that sound like interesting plays to you, you can do your own due diligence on these companies, whether that's looking at other subreddits or on a site like FinViz, or even something like StockTwits. Of course, here you just have a bunch of random people who may have no idea what they're talking about, or people just trying to pump something for their own benefit, so take everything with a grain of salt. You can also search the ticker on Twitter, again to gauge public sentiment here. Oh hey there, it's me from the future. I just want to let you know about this one website I found after I filmed. It's daco.com, but basically you can see an overview of trending stocks on Reddit. You can then click on the company, and it gives you this whole overview of all of their stats, their data, filings, all sorts of information, and then at the very bottom, there's also links to Reddit threads discussing that stock. So it can be a really good way to see what's trending on Reddit without going too far down the Wall Street Bets rabbit hole, so I'll link that in the description below. With the stock market, the only thing that's certain is that nothing is for certain. No one on Reddit or elsewhere really knows what direction a stock will go, but you can start to compile a case for why a stock is undervalued and primed to pop off. GameStop first hit my radar in November last year because of a post I saw on Wall Street Bets. Right now I have my eye on GameStop, which I may enter into a trade on Monday, but we'll have to wait and see how the market opens then. Of course, in hindsight, it's easy to see, should have bought in at $11. But back then, no one except Roaring Kitty and a handful of others knew the potential. So let's take a closer look at GameStop to identify a realistic way we could have traded it. So here I am on Thinkorswim, which is a platform through the brokerage TD Ameritrade. We have the daily chart of GameStop, where each candlestick represents one day. Let's go back to January before its first big spike. Let's say GameStop is on your radar, but you aren't sure if it's ever going to squeeze, so you haven't bought in yet. The price was in the upper teens for a few weeks before launching into the 30s and beyond, so let's look at what really went on. On January 12th, not much happened. It opened at $19.96 and closed at $19.95, so nothing of interest with price. The trading volume was 7 million, which was also unremarkable. But the next day, seemingly out of nowhere, it had a massive day, opening at $20.42 and closing at $31.40. But here, what's most interesting, the volume. Over 144 million shares were traded that day, which is 12 times the average. I mean, just look at that volume bar relative to everything previous. So if I was looking at GameStop as a meme candidate, this would be the day that I would want to enter position. So here's that day on the charts with each candlestick representing 5 minutes. GME had a lot of volume in the morning, which would have piqued my interest. But here's the thing, I never want to chase a stock. When it's pumping, I want to see it pull back and retest before I jump in. The first time we really have that is here. The price came back down to both our 21 EMA and VWAP. VWAP is the orange line, and it stands for volume weighted average price, and it basically shows you the average price the stock has been traded throughout the day. So if you play this just about as perfectly as you could, this $30 area would be a great entry. It closed that day at $39.92, so you'd be sitting pretty comfy with the $30 per share cost basis. So let's say you have $1,000 of meme money that you can put into something and hope it pops off. So you buy 15 shares of GameStop to start your position at $30. The stock then spent the next 5 trading days accumulating. Nothing too exciting, but also it didn't come anywhere close to your $30 entry. The volume over these days definitely was lower than on the 13th, but still well above where it had been previously. The share price spending so many days in the 30s and 40s should give you confidence that there is something to this play. It's not like it just crashed back down to $19 the next day. So I would consider adding to my position after the price is stabilized in this area. If you were still uncertain, January 22nd definitely gave you more confidence in the play. It opened at $42 and ran all the way up to $76 before closing at $65. So here's that day on the 5-minute chart. It had a really nice run up with some great volume. Then we saw it retest down by VWAP and our moving average. If I was looking to add to my position, I would buy around this $58 range where it moved sideways for a while. So let's say I bought 9 shares at $58. I now have 24 shares with a cost basis of $40.50. So now we're sitting pretty with our 24 shares. The price rocketed up soon after that, hitting a high of $483. Realistically, I'd have plenty of time to sell in the 300s, but if I have really strong conviction it could go higher, I don't really mind holding because the price is just so far from my cost basis. The safest route would be to take your initial capital off the table by selling about $1,000 worth of shares so you can sit back and play with purely profit. Now, the price of course did come back down to earth again, giving you plenty of time to sell with a healthy profit. Just one day came below our cost basis by $2, but still, it closed above at $40.59. Of course, GameStop wasn't done and launched off yet again. And again, we have a day with massive volume, 83 million, compared to the previous day's 7.5. So if I'm still holding shares, again, I can sit comfortably and watch the action. There's plenty of time to scale out of the trade in the upper hundreds and 200s if I want. Okay, that was hindsight, so it's easy for me to look at the chart from the future and say what I would do. If you do want to see a breakdown of how I actually played GameStop, I'll link to that video below. But I scaled in as my conviction grew and then scaled out to take my initial capital off the table. But the problem is you had to have your finger on the pulse to get in early. It didn't reach ultimum hype until the stock was in the hundreds. So when I had people asking me if buying at 180 or 250 was too late, well, from my perspective, it's far too late and there's so much more to lose. If you buy at $200 and the price comes crashing back down to 30, you just lost $170 per share, whereas I would have only lost $10.50 per share, assuming I didn't take any profit whatsoever and didn't sell on the way down. The key here is to just be plugged into those communities where people are talking about stocks and have a list of candidates that you can keep your eye on. Let's take a look at a few other examples. Here's AMC on the daily chart. If you knew that it also had high interest and could possibly squeeze like GameStop, when might be a good time to buy? The stock was in the $2 range with about 40 million in volume until the 15th of January. Here it had a volume of 162 million. The price didn't do much that day, but all of that volume should get your attention. The next trading day, it gapped up to open with lots of volume again. So here I'm waiting for the volatility of market open to die down and would consider entering in the $2.70 range. If I missed that entry, I would definitely look at entering after the next run up when it came back to VWAP. So let's say I have my $1,000 and I love the AMC play. Maybe I buy 160 shares at $3. Bad case scenario, the price falls back down to $2 and I lose $1 per share. The good case scenario is it goes to the moon and I catch a ride there. And of course, it did run up and hit $20 per share, and when it came back down, it was still plenty far away from our cost basis of $3. More recently, it hit a high of $72. That'd take your initial capital of $480 and turn it into over $11,000. Even if you don't manage to sell at the top, the price is currently in the $40 range, which is still a crazy return on your investment. The bottom line is, if you got into AMC when you saw volume start to spike, you should be sitting pretty without a worry in the world. Okay, for another quick example, let's look at BlackBerry. Before every run-up, we see volume start to grow. Except for that first one. That one kind of came out of nowhere. But on January 14th, it had 8 times the volume as the day previous. And more recently, in May, 26.5 million volume on the 26th compared to 7.5 million the day prior. Okay, here's one more, AHT. We see a large spike in volume on April 28th of 49 million compared to 11 million average. Then over the next several weeks, it ran up to $7. So obviously not every spike in volume leads to a run-up, but when considering meme stocks, it's a good idea to pair due diligence with volume to help identify potential opportunities. So here's a meme play I just entered. I've had my eye on this and I missed the latest pop, and that is Workhorse. According to highshortinterest.com, they are the most shorted stock with almost 42% of the float sold short. Now, I've read some DD on Reddit, saw this post from Ortex on Twitter. They actually called the GameStop and AMC short squeezes fairly well, and it looks like their short squeeze indicator went off today for Workhorse. I checked it out on TradyTix, and things are looking bullish over there as well. On the chart, June 2nd was a big day for the price, and 3 times the average volume was traded. Volume is still relatively high, and today the price dropped 10%, hovering right around $15 per share. So right before the market closed, I grabbed 4 call contracts for July 16th with a strike price of $16 for a total of $980. Now generally, options are a bit riskier with something like this. The implied volatility is high at 144%, but I still felt the contracts were cheap enough where it was worth a shot. But a safer play would just be buying shares instead. I really want this $15 area to hold, and it's possible before this video even goes live that I cut the trade for a loss. Who knows? But I'm buying at this price area where it's been supported several times, so I can feel pretty safe with this entry, and if support fails, I can cut the trade for a small loss. I'd love to see the price reclaim the $18 range and potentially squeeze higher. Trading meme stocks can definitely feel like a crapshoot most of the time, but in my opinion, the best way to do it is to buy in at a price point that limits your risk. Combining due diligence, social sentiment, and spikes in volume on the chart can hopefully help you catch some stocks before they rocket off. Memes are inherently riskier than other stocks, but they also have pretty enticing upside. Now, I'm not sure how long meme stocks will be turning smooth-brained apes into millionaires, but with the huge increase of retail traders, it just may be here to stay. Without spamming, let me know in the comments which meme stocks are on your radar. I'll also be sure to let you know how this Workhorse trade pans out. You can also follow me on Twitter where I'll post some updates there. If you would do me a favor and hit the thumbs up button, consider subscribing if you haven't already, and I'll see you in the next one.